Good evening, everyone. Welcome to the channel. Today I am going to talk about Sinopec Ssc interim report. Do note that this is not a financial advice or a buy or sell call. All content are AI generated and is not associated with anyone. Sinopec Oilfield Service Corporation offers a wide range of businesses and services including petroleum engineering and technology services, geophysical exploration and development services, land and marine, drilling design, construction, and technical services, onshore and offshore, logging engineering contracting and technical services for wellbore oil evaluation downhole operation engineering services, oil testing, workover, sidetracking, fracturing, acidizing engineering construction services, feasibility studies, design, procurement and construction for, plus onshore and offshore oil and gas fields, plus long-distance pipeline projects, plus oil and gas transporting process, storage, and transportation plus petrochemical supporting projects, plus building construction, plus water resources, and hydropower projects, plus ports and waterways development, plus electricity transmission and distribution, projects manufacturing of pressure vessels, LNG, projects coal chemical engineering services, geothermal utilization services, energy saving services, municipal roads and bridges construction. The significant increase in Sinopec Ssc stock price over the past year can be attributed to several key factors. Firstly, the company secured a major contract with Saudi Aramco worth 8 billion yuan in June 2025, which likely served as a primary catalyst for the stock's peak around that time. Additionally, Sinopec Oilfield Service was awarded multiple contracts, including a 593-kilometer gas pipeline project and an EPC project in Iraq, further expanding its international footprint. The company's positive financial performance and forecasts also contributed to the surge in stock price. In March 2025, Sinopec Oilfield reported higher profits for 2023 and announced a 24% rise in profit. Furthermore, the company forecasted a 39% rise in first-half profit, although it ultimately reported a 16% rise. Lastly, shareholder-friendly actions, such as the equity buyback plan initiated by the company in September 2024, also boosted investor sentiment, contributing to the stock's significant increase over the past year. The primary drivers of revenue growth or decline in this company can be attributed to several key segments. The drilling geophysics segment experienced a significant growth of plus 19.2%, while the special drilling segment saw an increase of plus 18.8%. On the other hand, the construction segment witnessed a decline of minus 10.6%, and the geophysics revenue decreased by 15.4%. The logging and downhole engineering segment had the largest increase in revenue, with a growth rate of plus 4.3%, while the engineering operations construction segment experienced the largest decrease in revenue. Regionally, the PRC saw an increase in revenue, whereas the Middle East witnessed a decline. These variations indicate that the company's revenue growth or decline is largely influenced by its performance in specific segments and regions. Net income and profit margins experienced significant growth in 2025. Our company witnessed a notable improvement in its financial performance. Net income surged by 9% to reach RMB 492,256, up from RMB 451,807 in the previous year. This increase can be attributed to two key factors: the rise in weighted average return on net assets and extraordinary gains. The operating profit margin saw a substantial jump from 1.9% in 2024 to 13.8% in 2025, while the net profit margin also increased from 7.3% to 9%. The significant boost in these margins can be attributed to the increase in weighted average return on net assets, which rose by 1.73 percentage points. Extraordinary gains and losses played a crucial role in this growth, contributing RMB 68,356 million to the overall increase in net income. This substantial contribution highlights the impact of exceptional events on our company's financial performance. Overall, these improvements demonstrate a significant shift towards increased profitability and efficiency. The company's financial performance indicates a strong ability to generate positive operating cash flow. This is evident from multiple pages of the financial summary, where net cash inflow from operating activities consistently shows a positive value. Specifically on page 103, it is stated that the current period's operating cash flow is $2,150,567, and on page 110, it is noted that the operating cash flow status is positive. Furthermore, pages 135 and 139 confirm that the company is indeed generating positive operating cash flow. This suggests a healthy financial position for the company, with sufficient funds to cover its operational expenses. The company's debt level has experienced significant changes over time. While total liabilities decreased by $953,412 at one point, page 36, other indicators show an increase in debt. Specifically, long-term borrowings increased by Rm 199,918,000, page 14, and short-term borrowings rose by 24.7%, page 91. Additionally, the total debt level has grown from RMB 22,713,925,000 to RMB 28,474,170,000, page 20, with a notable increase of RM 154,190,000, page 19. Regarding interest expenses, there is limited information available. However, financial expenses did rise by $81,288, page 99, and interest expenses on borrowings increased by $21,136, page 103. Meanwhile, loan interest expense decreased from $317,066 to $301,468, page 119, and interest paid rose from $355,632 in 2024 to $377,778 in 2025, page 135. Overall, the data suggests that the company's debt level has increased significantly, while interest expenses have shown mixed results. The company's financial performance varied across different regions and segments. The Sichuan, Xinjiang, and Chongqing regions, as well as the special drilling, logging, and downhole engineering construction, and drilling engineering segments, demonstrated strong performance. In contrast, geophysics operations, special geophysics engineering, and unallocated/eliminated segments struggled, indicating areas that require improvement. Management is outlining a comprehensive plan to enhance support capabilities and strengthen integration. Key strategies include promoting new production organization models, increasing drilling footage, and advancing remote monitoring and control operation modes. Additionally, they aim to broaden financing channels, secure adequate funding, and achieve an appropriate equilibrium between risk and return by minimizing potential adverse effects on financial performance. The company has demonstrated its commitment to returning value to shareholders through two key initiatives. Firstly, it has paid dividends, with RMB 424 in dividends receivable recorded on page 79. Secondly, it has also engaged in share buybacks, repurchasing a total of 22,366,200 shares as stated on page 21. Concerns about inventory buildup and supply chain disruption. The financial report highlights potential issues with inventory buildup and supply chain disruption. Notable concerns include a significant increase in cash paid for purchases of goods and services by $1,992,099, indicating possible inventory accumulation or supply chain problems. Additionally, the raw materials balance increased while goods in process decreased, suggesting potential inventory buildup. However, the report also shows that the company is actively managing its inventory levels through provisions for depreciation recognized at excess book values over net realizable value. This suggests a proactive approach to mitigating potential issues. That concludes the financial summary for Sinopec Ssc. Feel free to comment below, and I will be happy to answer them when possible.